Hello everyone. In this video, we'll cover the process of preparing an accounting equation followed by a practical problem that I have taken from class 11th accountancy textbook by NCERT. But before jumping to the topic, make sure you know what an accounting equation is and also what assets and equity and liabilities are. I recommend watching part 1 of this video where we have discussed these topics in detail. You can get the link to that video in the I button on the top right corner of your screen. By the way, the accounting equation is simply a mathematical equation that says that all of a firm's or a business organization's assets are equal to its equity and liabilities. Process of preparing accounting equation. Step 1. Analyze the transaction in terms of assets, liabilities, revenue, income and expenses. Step 2. Decide the effect of transaction, that is whether increase or decrease in those assets, liabilities, revenue and expenses. Followed by the next step, that is record the effect on the relevant side of the equation. Let us move to a practical problem and try to solve that by following these steps. So, this is the question which says prepare an accounting equation on the basis of following. Transaction 1. Harsh started business with cash amounting 2 lakhs. Next, he purchased goods from Naman for cash rupees 40,000. Then he sold goods to Bhanu costing rupees 10,000 for rupees 12,000, which means cost price is 10,000 and selling price is 12,000. Next, he bought furniture on credit worth rupees 7,000. Next, he paid the electricity bill of rupees 2,000. Starting with the first transaction, that is Harsh started business with cash rupees 2 lakh, which means Harsh invested rupees 2 lakh to start that business. Here an asset is created in form of cash and the source from where this cash comes in business is the Harsh, the owner himself. If you remember, I told you in the last video that the money invested by the owner is termed as equity or capital. Now, as the effect to this transaction, assets and liabilities both the sides are increased by 2 lakh rupees in form of cash in asset side and capital in liability side. Now, the second transaction says that he purchased goods from Naman worth rupees 40,000 by paying him in cash. So, on analyzing the effect of this transaction, we'll find that first a new asset is created, that is the goods, or we call it stock. But second, an asset is decreased, that is the cash. After recording this effect, we will see that the total assets remain unchanged and the equation will appear now as follows. Also, notice that total assets are equal to equity and liabilities and they should remain equal always. Moving to the third transaction, which says Harsh sold goods costing rupees 10,000 for rupees 12,000, which means he sold those goods for a profit of 2,000 as he sold those goods at 12,000 rupees but their cost price was just rupees 10,000. When we analyze the effect of this transaction, we'll find that the stock is reduced by 10,000 but on the other hand cash is increased by 12,000, which results in an overall increase in asset side by 2,000. This net increase on the asset side is due to profit on sale of goods, and all profits and gains are added to the capital. And after recording this effect, the equation will now appear as follows. In the fourth transaction, he bought furniture worth rupees 7,000 on credit. It means the asset side is increased with the addition of a new asset, that is the furniture itself. But as it is purchased on credit, which means payment is not made in respect of this purchase, it gives rise to the liability towards the seller of that furniture as Harsh owe 7,000 to him and we call him as a creditor. After recording this, the new equation will appear as follows. Moving to the last transaction of this question, which says he paid the electricity bill of rupees 2000. On analyzing this transaction, we'll find that the cash in hand is reduced by rupees 2000, but unlike the last transaction, he did not get any asset in return because bill payments are expenses and expenses are tend to be reduced from the capital. Hence, the capital will be reduced by 2000, and after recording this transaction, the equation will now appear as follows. And it will be observed from above that the total of assets will always be equal to total of equity and liabilities. If you have any doubt regarding this topic, then you may comment that below. And if you understood the topic well, then I have a question for you. And the question is, which of the following equation is incorrect? Now just pause the video, go through the options carefully and then comment below the right option. Okay guys, that's it for this video. This is Sonu Bajaj signing off.